Welcome to the OPEC Monthly Oil Market Report podcast. This podcast was recorded on Friday, November the 11th. I'm Etna Trainer, and every month we'll give you an overview of the oil market according to the Organization of the Petroleum Exporting Countries. Let's take a look now at the highlights of the November 2016 OPEC Monthly Oil Market Report. Global oil inventories have grown rapidly since oil prices began to fall in the middle of 2014. The steady decline in prices came as total oil production outpaced world oil demand. Lower prices and the wide contango structure of the market have provided the financial incentive to place large volumes of oil in storage. This has led to an increase in OECD commercial inventories by more than 400 million barrels since the end of the second quarter of 2014, along with an estimated build of 240 million barrels in non-OECD inventories. In addition, floating storage has also seen a gain of 50 million barrels over the same period. Altogether, OECD total commercial stocks saw a slowing build in the first 3 quarters of this year, increasing by 67 million barrels compared to a build of 248 million barrels over the same period last year. The slowdown in the build of OECD oil inventories can also be seen in the declining trend of the difference with the latest 5-year average. The stock overhang currently stands at 304 million barrels compared with 350 million barrels at the end of last year. Within the components, both the pace and period of stock building has differed. Crude inventories rose slightly over the first 9 months compared to the massive build of 150 million barrels during the same period a year ago. In contrast, OECD product stocks have seen more consistent builds, increasing by 70 million barrels since the start of this year, which is broadly in line with the 90 million barrels increase seen in the same period a year ago. The slower build in crude oil stocks in 2016 has been due to lower global supply growth, which has been below the substantial rise seen last year. Indeed, from January to September this year, global oil supply grew by only 0.3 million barrels a day, compared to an increase of almost 3 million barrels a day in the same period last year. For product stocks, the main driver for the persistent build has been higher middle distillates production amid reduced demand for this product. Oil inventories in the non-OECD have seen a reduced build this year. China's inventories have only increased by 60 million barrels since the beginning of this year, compared with more than 90 million barrels last year. This could be explained by the fact that the country has approached its goal to fill the second phase of its strategic petroleum reserve by the end of this year more rapidly than expected, and as a result has begun to slow purchases. The recent increase in oil prices, up from the low levels seen at the start of this year, may also have discouraged China from importing more crude for storage. The slowing build in global oil inventories is furthermore confirmed by the difference between global oil supply and total world oil demand, the implied stock change. Over the first 3 quarters of 2016, the implied stock change averaged 1.1 million barrels a day, compared with almost double this amount last year during the same period. Looking ahead, it is important to consider the immediate impact that the assumed global supply-demand balance has on inventories, given the expected demand for OPEC crude in 2017 of 32.7 million barrels a day. Adjustments in both OPEC and non-OPEC supply will accelerate the drawdown of the existing substantial overhang in global oil stocks and help bring forward the rebalancing of the market. This has been the November 2016 Monthly Oil Market Report podcast, brought to you by Podcast Production Limited. If you found this podcast useful, please register your vote on iTunes. Thank you so much for listening, and goodbye until next month.